All right. What's going on, everybody? So we are maintaining that top 10% in the Leap day trading competition. That, my friends, is very good news. I'm in such a great mood today because when I woke up and I saw that, I knew we were doing something right. And we've been doing something right every single competition because so far, every competition that we've been in, we are finalizing in the top 10%, top 8%. We were in the top 4%, and then we started trading some other assets like crude oil and gold, micro Bitcoin. Didn't work out so well, right? We should have just stuck with our trend cloud strategy for the NASDAQ and maybe we'd still be in the top 4%. I don't know. There's some big numbers being thrown up on the board there, over $50,000. It's only day number 8. Today is day number 8. My goodness. I don't know where they're getting 50 grand from off the charts. God bless them and the horse they rode in on. But we are doing very well. So if this was actually our account, or if we were running, this six-figure account, we'd be doing very well. And that's really the purpose of all of this. We want to compete in day trading competitions. We want to put ourselves through decision-making process that's got a little bit of pressure on us, right? Like the whole world is watching us. There's 43,000 people trading in this competition. So there's a little bit of pressure, right? The eyes are on you and you want to do well, right? You want to win. So if you've got that little bit of competitiveness inside of you, it's going to go a long way in your day trading account because you want to be able to make decisions under pressure. So one of the ways that we do that in the mentorship program here at Trend Cloud is we put you through competition, right? We get you to compete and see what that's like and make decisions. Can you stick to the trade plan? Are you deviating from the plan? And then we put you through something called a small account challenge. That's also in the simulator, but we kind of go, we do it in the simulator and then we also do it live to really make you feel that pressure. So it's a $500 day trading challenge, small account challenge. And we see how long will it take you to take the $500 and turn it into 5,000. It took me 3 months, right? And you also have to mark down how many times you blow out the account, right? It's very difficult. It's not like you fail if you blow out the account of a $500 account, okay? It's just a way to get you to realize the more money you have in the account, the easier it actually is. That's one aspect. The other aspect is in a small account challenge, you start to figure out, you really have to concentrate and you start to figure out what are your weak points? What do you need more help with? For me personally, it was a little bit of revenge trading, right? Like, oh man, I got to get that money back, right? Or over trading, right? So those two, for me, at this point in my trading career, it's over trading and revenge trading. Where at the beginning of my trading career, it was more about over leverage. It's like, oh man, why did I over leverage? That's the first habit most people have to break is the over leveraging part. And all of this goes back to risk management. It's never a strategy problem, right? Strategies are very easy to learn, right? Strategies are easy to learn. It's the risk management part that's the most difficult. So, as we go through these different phases, right? Basic training, practice in the simulator, then we take you into competition, then we do the small account challenge, both simulated and live. And then that is when the fifth phase, you trade live on your own account. And by then, you should really know where your weak points are, what do you need to concentrate on. And you also start to learn how it's extremely beneficial if you just focus on one asset, one strategy, and just be the best at that. You will get to know that particular asset. We like trading the NASDAQ because when the data came back and we were looking at the strategy across all asset classes, the NASDAQ gave us the best win rate and gave us the best profit, right? A little bit you're right around 70% accurate, and those are extremely good numbers. Okay, so let's get into it today and check out what we are doing here. So we're on the NASDAQ right now, 3 hour chart, right? I wish I was watching this during the night, because it did end up making that move. Well, let's just take a look at the 15-minute chart here. Here's our breakout. And I was messing around with moving averages, and I was just reading up on Fibonacci again. This is a 3 simple moving average, and I've got it on the 15-minute chart here. And just look how it works like a fulcrum point, almost like a VWAP. And look at how, especially for going long, right? Look at how you get that break above the 233, and then it just gets used as support. I mean, look at this, right? It did close below the 233 right here, bounced off, kept going. I believe this is yesterday. Yeah, yesterday, a lot of people got stopped out because look at this, right? It finally broke to the upside just a little bit and then just ripped down, took out all those stop losses, and then made its way up, right? Again, retest here. And this right here is what we were looking for yesterday, right? Here's the opening range starting to form. We're just coming out of the supply zone that we drew out on the daily chart, I believe. Let's take a look. Here it is right here in purple, and there's the full supply zone. The reason why we dragged the supply zone down to here is because that's where price hit, right? For resistance, pulled a little bit deeper into the supply zone, ripped to the downside, and now we're right there again, right at that same resistance point. Okay, so we do have our ADR checkpoint right here, and that's looking pretty good for a target, right? So, we're very close to the supply zone area. In fact, I'm going to use the full wick. Okay, I'm going to use the full wick of these candles here, and it has just hit that. Okay, so we're going to be cautious. We're going to proceed with cautiousness. We've got a ton of momentum and trend on our side today, and we have to use that. So this is the daily supply zone. Go back to the 15, recalculate your charts. Okay, we are above that 233, right? I'm wondering if we're going to come all the way down here, hit this area. This is a very interesting demand zone, guys, and let me tell you why. We're close to the 233, right? And look at how this is where all the buyers came in, right? All the buyers came in right here. So, this, again, a retest of this area here, very interesting. This is very interesting to me. I really want to, watch this and see if we can get some sort of reaction off of it. It is quite far away. The only way this would really work out today is if we get another candle like this here, right, where it just kind of breaks to the downside and immediately leaves. Let's look at the full process here. Let's go over our full process. 3 hour chart. 3 hour chart is in an uptrend, right? Momentum is above positive 100, and we are cycling up. This is the best that we can get on our 3 hour chart. So everything is in alignment with each other. The 1 hour chart is in an uptrend, very strong momentum to the upside, right? We actually broke above positive 200 on the CCI, Commodity Channel Index, right? That is specifically built for commodities. We love using this CCI indicator for our process, for our trading process. So we've got all of our components are met. We even have a little bit extra on the cycle, right? We are cycling up, which means we have entered the impulse phase of this move. So right here, now the only thing that we're running into is that we are running into some resistance. There's your supply zone, right? And we have just hit it. So, we're getting a big reaction off of that. Oh, we got some motorcycles going by here. Motorcycles! All right, so what's going to happen here? Well, we can only trade what we see, right? We are going to wait for the opening range to form, and we will look for the breakout. of that opening range, right to our target here. And what I think I'm going to do, because in the competition, it specifically says you can only trade one contract of the NQ, which is the full contract of the NASDAQ, and you can only trade one contract of the micro, which I thought was really strange. So they're not allowing you to scale out of the micro NASDAQ. They are letting you have it on the ES though. So one contract of the ES, and I believe you can have two, I believe, is it? Four. Okay. We'll see. We'll take a look at the rules again and see. But you can, looks like you can scale out of the micro ES. Look at how the micro ES is extended on that 1 hour. So this is kind of making sense. Very strong readings on the micro ES here, and we're extended on that 1 hour chart. So I'm wondering, we definitely know that we're going to get a break below here, right? We are going to get a break below. Let's take a look at yesterday's opening range on the ES. Here it is right here. Let's box that out on the ES as well from here to here. And that is going to be an area that we're going to want to take a look at, because this is where all the buyers came in. And look at that. There's that 233 hanging out there on the 15-minute chart as well. So bearish candle forming on the opening range. We've got a very bearish candle forming here on the opening range. You know, we like to see when all of our components are met, right? We like to see trend going up on the 3-hour chart. That's an extra bonus. We really just look at momentum, but trend is up on the 3-hour. Momentum is very strong, right? It's above positive 100, and we are cycling up. Those are three components just on the 3-hour chart that are so powerful for us. Then we go to the 1-hour chart. We look for that trend. We are above the trend line. We are above the 50 simple moving average. Very strong readings on CCI, above positive 200. So very strong readings. We like to see, when we see all of that, the pre-market, we like to see a bullish candle form for the opening range to actually make the breakout to the upside, right? Here we've got a bearish candle forming. And that piece of information, coupled with the fact that the 1 hour is extended, means that we're probably heading below the 50 simple moving average here to some sort of support, right? And I'm just going to box all of this out. Here's the market edge down here. We'll do a separate box for that. We'll draw it like this. Okay, and we will make it pink. Okay, well, pink and green kind of look brown, just to mark off the edge there, okay? So, and it's also the lower ADR, right? It's also the very first ADR checkpoint, that's average daily range on the downside. Okay, so this is looking like a very good area to go long, right? It comes down, kind of hits that 233. Let's see if there's any structure. Yeah, there is actually. Look at how this right here, this drop base rally is right at that 233 moving average. What I've noticed on the 15-minute chart using the 233, which is a Fibonacci number, by the way, if you go to ChatGPT and just type in Fibonacci sequence up to 300, it will give you some really nice Fibonacci numbers to work with on your moving averages. I was looking at the 144 and the 233. Loves to use the 233 as support, specifically on the NASDAQ, on the 15-minute chart. You got to be very specific, especially if you're back testing anything. You can't say, oh, the 233 works great on the NASDAQ. Well, what time frame? You've got to back test it. So I'm going to work on some programming, and I'm going to program into this strategy tester here using Pine Script Editor. Okay, that's right down here at the bottom of your screen. I will program into the Pine Script Editor a formula that will take the trade as price breaks above the 233 on the 15-minute chart. Very, very specific, okay? And the exit rule will be until price closes below the two. So for instance, right here, it comes down, it breaks above, closes right here, right? So right here is where we would take the trade. It doesn't go very far, but just to show you what it will do in the program, take the trade right here, and then the trade would be exited right here. So this would be considered a loss, this one right here. This would be considered a big win, right? Comes up, closes right here pretty deep. You get that really nice pullback into this, into this area here, this rally-based rally, and then it starts to take off. So we're in the trade right here, and we're not going to get out of the trade. In fact, this just kept going, right? Right here. Right there, it closed below. The program would exit the trade here and start it again. We start right here, in the trade right here, and this thing is just still going. Let's see how that's a very simple strategy. In fact, we're not even using multiple time frames, right? So that will be the bare bones of it. That'll be the skeleton of this strategy. And let's see if we can come up with another winning strategy that we could possibly automate and just let run. That's what we are still trying to build that out here at TrendCloud. Okay, candle is still forming. Again, we're on the micro ES here. Let's see if we could, let's find out how many contracts we could trade on the micro ES here. Let me get over to my documents. Oh, got a lot of lag. We've got a bit of lag here. I've got the rules here. There we go. 2. Okay, so we can only trade 2. You can see right here, we've got micro ES, 2 contracts. And see how the micro NQ, 1 contract. Micro full contract of NQ, also 1. Unbelievable. They're letting you trade 3 contracts of the micro Dow, the YM. All right, so we'll go for 2 contracts on the micro ES here. And we can also, if we have time, we can also put 1 contract down on the regular ES. This way we'll have 3 contracts all together when we'll have to manage the 2 trades. Again, you're in competition mode, right? So when you're in competition mode, that's what you want to do. Gonna have a little tea, get caffeinated. 1 more minute left. All right, 1 more minute left. Let's drop down to the 5-minute. We know we have very strong readings. Yeah, this is see, this is the problem, isn't it, guys? This is the problem. Let's just get our 2 contracts ready. Okay, this right here is the issue. Extended trend, right? We are extended, which means that the car has run out of gas and it's got to pull into the gas station, right, which is below the 50 simple moving average to refill. Looks like we're going to get a breakout to the downside. Isn't that interesting? We've got a bearish candle forming the 15-minute opening range, and with all this upward momentum and trend, and this is breaking out to the downside. We don't like that, right? That kind of negates the trade for us. So now we're kind of in bear trap mode, right? We're looking for those bear traps, and the bear traps do not have the best win rate, right? We have noticed that the bear traps and bull traps, they're actually less than 70%, let's just say. The strategy that we put together, yeah, here comes the breakout to the downside. Obviously, we're not going to go short on this. We're going to be looking for some sort of bounce out of the demand zone. Yeah, there's the breakout to the downside. Let's see how it reacts to the 2. Obviously, look, not going short here, right? All of our components are met to go long. So we are pulling back. Let's see how it reacts off of that 233 simple moving average there, that Fibonacci number that we've been messing around with. And let's check it out. We're not going to sacrifice or give back any of our profits, right? We're in the top 10% in this competition. If we were running this fund for a client, they'd be passing out our business cards right now, right? So, this is how serious you have to be about it. And that is what makes you a profitable, badass day trader. Okay. We're not looking to do this, as a hobby, right? This isn't a hobby for us. Like we're doing this, like this is part of our income. It's our profession, and we take it very seriously. So we're not just gonna mess around, right? We don't just mess around. We compete competitively. We're very aggressive competitors. We like to go for it, right? And we take it seriously, as serious as our own live accounts, right? We're not doing this for fun where we're just gonna like, oh, whatever, we have all the money in the world, let's just give it away and give it back to the market. No, that's not what we do here. Let's just keep scanning. Let's go back to the NASDAQ as well. Take a look at what's happening on the NASDAQ. 5-minute chart on the NASDAQ is already hitting that we are not extended for five. It doesn't That's interesting. It's not registering as extended. It's probably just it's just an algorithm, right? And the algorithm is not telling us that we're extended here, but it is telling us on the ES. Now let's pull up the YM as well. YM. Let's pull up the Dow. Oops, and also the MYM. And also the micro, please. Okay. We are not extended on the 1 hour there on the Dow. Oh, look at this. Isn't that interesting? Look at how on the micro, we're on the full contract of the Dow here. Look at that. We still have all the components met. Very different, right? We are actually still within the opening range on the Dow. Very interesting. Very interesting. ADR all the way up here. Let's go out to the 15. Wow. The Dow also likes to use the 233 as support, right? We can only make the observations that we see, right? Look at this here, right here. The 233 seems to be very significant, guys. I would like to try and incorporate that into our strategy. What we're seeing here is very strange, right? It's not strange, but it's an interesting observation. We almost hit the ADR checkpoint. A lot of sellers came in right in here. Let's go out to the 1 hour, 3 hour. I'm trying to get a fix on where this thing is as far as supply goes, right? We have broken through previous week's high. There you go, right there. Okay, so we have broken through the previous week's high, on this is the Dow. So, okay, interesting. Go back to the 15, and that's kind of where we're at. So you see, you go out to that you get a bird's eye view of what's going on here. Then you start to, have more of a microscopic view, right? You got your macro view and then your micro view. And on the lowest time frame, I know people who I don't know how people just trade off of a 5-minute chart and they just look at that. I don't think they're making any money, honestly. I don't, and I see a lot of people do it, and I just don't see them being consistent. I really don't. I'm sorry. If you're looking at one time frame for your entire trading process, I don't think you're making any money. It's easier to just look at one time frame. That's why they do it. And when you're a beginner, you love just looking at one time frame because it's easier. But as you get more experience, you should be looking at multiple time frames. But some people, they don't want to do that. They don't really want to progress in their learning. And so they kind of stick with one time frame. And again, I don't see them in competition. I don't see them doing small account challenges. They just kind of spin, 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 and never progress. And they just love to lose money. I don't know. I don't get it. So anyway, we're trying to break out here. We are breaking out of the Dow. Let's pull that. Come on. So we're breaking out of the Dow here on the 5-minute opening range. Lot of momentum, lot of really nice momentum. Perhaps we can take a short target on the Dow right to here, being that that's the opening range. There's the rally base rally. Go back to the NASDAQ. We're retesting there on the Dow. Back to the NASDAQ. What's happening on the NASDAQ? Look at that. NASDAQ came down, hit that 233. Again, I would rather take this on the NASDAQ. And now we're making that making that move up. Wow. I think we definitely have to pay attention to this 233 simple moving average here. 5-minute chart. Okay. So yeah. So this, this little area down here, there's a very neutral candle. There's really no structure here, right? Except for this drop base rally. There's the 233, broke a little bit below it, and now we're starting to move up. Well, what about taking one contract there? It's so expensive, right? I don't want to give up that position. That's a $1,500 risk. We don't want to give that up for the competition on a bear trap, right? We want to be able to see all of our components met and have that bullish candle form on the opening range and then take the break out of that opening range. That is the decision that you've got to make, and that's a risk management decision. So I'm looking at what this costs. First of all, it's not our strategy, right? This is pulling to the downside, breaking out to the downside. Yes, it's bouncing off the 230, but that's not what we look for. We don't look for traps, right? We don't look for bear traps when we are in an uptrend with all this momentum to the upside. We look for breakouts, right? Bear traps are not going to be as profitable. The magnitude of the win is not going to be as great on the bear trap as it is, the magnitude of the win on the breakout with all of your components met. That's what's going to be the big money maker. That's how on the very first day we made $4,000. So, and then we ended up giving some of that back because, we were kind of trying to trade across the board. Oh, let's trade some crude oil. Let's trade some gold. Let's trade some micro Bitcoin. Like that was a mistake. Well, I mean, it wasn't exactly a mistake, but we found out together, right, during the competition, hey, you know what? We'd be in like the top 5% right now. We would be closer to, number one if we just stuck with our breakout strategy that we developed here. So let's just make the observation, right? Let's just make the observation and see what happened. This thing has already, maybe the sellers have already come in. We've come up to that daily supply zone in purple here. We've hit that daily supply zone, and now it's, kind of making its way into a deep pullback. And if it's following the S&P, well, we've got an extended trend on that 1 hour time frame. And the 1 hour time frame, guys, that's our trending time frame. So your middle time frame, this is why multiple time frame analysis is so important. Your middle time frame is your trending time frame. You do not go against that trend. Highest time frame is for momentum. Whatever momentum indicator you want to use, you use it on your highest time frame. In this case, it's the 3 hour. The middle time frame is for your trend. In this case, we're using the 50 simple moving average. The lowest time frame is your trigger chart, right? That's your entry chart where you take the entry and put your stop loss, whatever you're using. In this case, we're using the opening range breakout, the 15-minute opening range breakout. Maybe you're using a moving average crossover. Maybe you're just strictly using supply and demand zones. You cannot go against momentum and trend on your lowest time frame, right? The lowest time frame must have a minimum of two components, right? Trend and momentum. Okay, so every strategy that you put together for yourself, okay, actually has five, right? The five basic bare bones components is trend, momentum, supply and demand, right? Timing and multiple time frame analysis. Those are the five bare bones components of any strategy, or at least that's the way we build it here at TrendCloud. So the timing part, what we use for timing is this indicator here. This is a stochastic that we've modified, and we specifically use it to tell us, are we in an impulse phase or a correction phase, right? So in this case, we are back into that impulse phase. And we couple that with momentum and trend on the 1 hour chart for this strategy. When all components are met, we take the breakout to the upside here. So right here, it looks like the bear trap here is working so far. There's your demand zone or bear trap on this opening range, and it's in line with that 233, but we are on the 15-minute chart here, 5-minute chart, I mean. We are on the 5-minute chart. 15-minute chart, that moving average is nowhere to be found, right? So, but still, right? Still, we've got some structure here, right? And it shows up better on the 5-minute chart. All right, so that 5-minute demand zone has worked out very nicely in the ES. Again, this is working out, and that's great. We didn't take this trade because, to be honest, when we have such strong momentum and trend, right, across these multiple time frames here working together, we don't want to see a breakout to the downside. We want to see a breakout to the upside. And if it doesn't do what we want it to do, you've got to just make a mental note, like, this is not what we want. It's probably not going to be as good, right? The quality of this setup is not going to be as good as when we saw last week on day one with that big move. All components met to the upside, broke out to the upside. We took the trade, and the magnitude of that trade was just phenomenal. And that was a $4,000 move. Okay, so when you're running $100,000, when you're running a six-figure account, that's big money. That's important money. All live money is important. Okay, and again, this isn't our hobby, right? This is pretty serious what we're doing here. We're working with our hard-earned money. And do you just want to take a chance with it? I don't think so. I don't think you want to just see what happens. You can't do that in a live account. And if you do, God bless you and the horse you rode in on. I guess you have tons of money that you can just throw away like that. But we're money makers, right? We're risk managers, we're money managers, and that's what we love to do, and that's why we're all here today. So, and we love finding, we love to make these observations, like with these Fibonacci sequence, these Fibonacci numbers, and make new discoveries, right? Like, hey, 15-minute chart, 233 simple moving average, very powerful on the NASDAQ as well as the S&P here. It's even more, everything is more stable on the NASDAQ anyway. You can take a look right here, 5-minute on the NASDAQ as well. There it is, hits that 230 right there, 5-minute chart. So demand zone, supply zone, very close to each other, right? Not a lot of asymmetrical leverage. There you go, right there. You can see the algorithm start to work for us on that extended trend alert. Your trend cloud system will alert you when the trend becomes extended by turning the candles blue, okay? Nice blue, as if to say the trail has gone cold. So we're just starting to turn blue on that 1 hour trending time frame, and that's it. So another thing that I wanted to talk about was, why is it so difficult to create a paycheck for yourself for day trading? And this is the reason. You may show up to work, you just may not get paid out. You have to understand that. So with day trading, you can't really gauge. There's no residual, there's no accounts receivable, right? There's no accounts receivable in day trading. Like, hey, I put in all this time and clients have paid money, it's in accounts receivable, waiting to get cleared or whatever. It doesn't work that way. You can only take what the market gives you. And when you have a strategy that is very strict, right? When you're very disciplined in your strategy and the strategy works when you use it properly, you cannot convince yourself, to just take a trade because you feel like it. You've got to use your strategy for that income. You may not get paid this week, okay? I've had some Trend Cloud members say, "Holy cow, ever since I started with you, I was used to taking like 17 trades a week or whatever, and now I'm only taking like three or, 3 to 5. And I'm like, yeah, well, that's that's the process, right? So you're following a process now. It's very easy to deviate from your process when you're by yourself. So the one of the benefits of the mentorship is that we're all talking about this. We're always talking about it with each other. Hey, did you see this? We're looking at these Fibonacci numbers. Isn't this interesting? Hey, strategy is working out great and it's a great filter. I just feel like I have to trade or something. You don't, and that's how you preserve your capital, right? You preserve your capital by filtering out the best trades. And if you haven't done that before, at first it could be very strange, like, holy cow, shouldn't I be trading today? And it's like, well, did the setup meet your strategy requirements? It's like, no. Well, then you filtered out the trade. That's what you're learning to do. And it's a little awkward at first. So you're going to feel a little awkward filtering out more trades than you're used to. Once you get through that, you're like, wow, I actually made more money this month. I made more money this month because I just simply filtered out the trades. And it's a great remedy for over trading. And when you go through that small account challenge, it that will remedy any type of bad habit that you have about over leveraging yourself. Because think about it, you only have $500 in the account, right? $500, it's you can't take $100 or $200 risk, that you would need a $20,000 account to take a $200 risk, right? That's 1%. Every trade has to be 1%, 2%, so that if it doesn't work out, it's just a scratch on the knee and you're not chopping your leg off, right? So that's the process that we go through here in the Trend Cloud mentorship program. And I find it to be extremely helpful. I put myself through it and said, you know what, I'm gonna take my process, divide it up into 5 phases of development, and I'm gonna put myself through it. And that's what I did. And now that's what I'm sharing with you guys here. So it's a very disciplined, structured way of filtering out trades and preserving your capital, locking in profits, preserving the capital. And that's what we've been doing. And there you go, top 10% in the competition. It took us 3 months, right, to go from $500 to 5,000. And we're going to continue to get better at that together. So that is what we do here every day. So, this bear trap is working out. Hey, great. I'm so glad that it is. But, not going to take this because we really want to see the breakout take place right away, especially when we have such strong momentum and trend on our side. Momentum and trend, two of the most important components of any strategy. Now you start to look at that across multiple time frames. I'm not talking about 10 different time frames, guys, right? Just 3-hour momentum, 1-hour trend, and then take your trade on the 5 or 15-minute chart. Just start with that. Just start with that. But to base your entire strategy on one time frame, like the 5-minute or just the 15-minute chart, probably not the best, right? Again, as a beginner, beginners love one time frame strategies. They love it. I'm not sure how successful it is, but because it's simple, that's what they like to stick with. So I hope that was helpful. Multiple time frames, right? Again, those 5 points of contact, right? For any strategy. Trend, momentum, supply and demand, or some people like to use support and resistance if they don't know supply and demand. Timing, right? Are you in an impulse phase or a corrective phase? And then multiple time frame analysis. Those are the 5 components of building out a successful strategy. And that's what we did here. with our trend cloud opening range breakout. 3-hour momentum has to be above the zero line on CCI. 1 hour, same thing. CCI must be above the zero line, and the price has to be above the 50 simple moving average. Those are the three components that we need to take the breakout of the opening range. Anything else, right? Like in this case, we had all of our components met, broke out to the downside, that negates the trade, okay? Because something is off. If we have an extended trend, right, that would caution us, right? Because now that was on the 1 hour chart there. You have to proceed with caution. So there's some caveats to the strategy, but overall, you have to have those three components met, right? From the 3-hour, 1 hour, and then taking the breakout accordingly on the lower time frame. So we've recently made an observation about that 3 simple moving average for the NASDAQ. I'm really liking it. Also, dropping down to the 5-minute chart as the breakout is about to happen. Also very helpful. Looking for that 5-minute candle to close outside of the opening range. That's another confirmation that you can add. We usually just take the actual breakout of the opening range when those conditions are met. And if maybe we're missing one piece, right? Like maybe the 1 hour momentum is below the zero line, right? But everything else is met. All of the other components are met. We might wait for that 5-minute candle to break out and close above the opening range and see if that pushes CCI above the zero line on that 1 hour chart. You can add to it and think through your process. What do I need to have all of my conditions met? What needs to happen first before this condition is met? It's a process, right? Developing your process is one of the most important skills that you'll ever develop in day trading. So that is my rant for today, and that's a lot, right? So no trade on this for me, only because we're right in the middle. It's almost, it's 10:17. We've got to get through all of this supply, and being that we're in supply right now, basically a daily supply zone, it's very powerful. NASDAQ likes to react off of the, daily supply zone, and we usually see some pullbacks. We know that because we like trading the NASDAQ and we watch this thing every day for at least an hour. I'm looking at this thing probably more like 5 hours a day. Believe it, now that I think about it, I'm in front of the screen throughout the day, for a good, probably about 5 hours. So I really know the price action on the NASDAQ. And that's it. So I hope you guys learned something today. I will get this video out to you and post it on YouTube as well. I think this was a good example of how to filter out a trade, made some observations on some moving averages, some extra bonus material on the opening range breakout, and how to actually use the trend cloud opening range breakout system, specifically 3-hour, 1 hour time frame using those CCI components. So try that at home, try it out in your simulator. If you like this video, give it a thumbs up, like and subscribe. Every time I come out with a new video, I will definitely post it for you guys. If I discover anything new, I will post it. So just like and subscribe and you will get that right away. So I think that's it for me, guys. Looks like we're going to get a breakout here any moment, but I believe this is going to be a bit short-lived. It's a little bit later in the day and things seem to be moving quite slowly. So no setup here today. So I will see you guys tomorrow and we will go at it again. You got it, Eddie. Good rant. Good. I'm glad you liked the rant. Thanks, Eddie. Okay, guys, I will see you tomorrow.